Hey, everybody. Oh, that's too close. You do not want to get that close. I have a cold right now, so I am definitely um, still contagious. And I haven't found my normal glasses, so I'm wearing the grandmother glasses here. I hope you like that. A little bit of the blue on there, although that's kind of a look these days, right? People like the colorful stuff, the Dan Ives and his colorful jackets and all that. Um, so we'll just let everybody kind of jump in here a little bit. Uh, let's see here. I know this was kind of short notice, so a lot of people are going to be watching after the fact, I think. I had a few things going on today. I had my first class for Turbo Trader Pro. We got the Turbo Trader Pro income scanner, the first of its kind in the world. So that's exciting. We had our first class going through kind of the walkthrough of how it works. And oh, what do we got going here? Looks like I got to do another show tomorrow morning at 10. That's show business, folks. That's show business. I'll give you guys just a little bit more of a chance to drop in here. Who have we got? Say hello in the chat if you can. And let me know, what's your experience with options, with investing, with watching YouTube? What's your experience? We got a little crazy hair here. You know what? I did add some positions today. Anybody, what are you guys trading? Tell me what you're trading. Tell me if you're adding anything, if you're worried about anything. Okay, so let's take a look here. We've got, I'm going to show you my screen if I can. Let's do this right here. The entire screen, the whole screen. Is that the screen there? Is that how we do it? Oh, we got a thumbs up already. That's kind of cool. No, let's show a different screen. I'm going to show you the other screen. Okay, we got some peeps showing up now. Happy to see that. It's always good for me to not talk into the void. All right. So we have got, so I am Hans Albrecht. I don't know if you guys know, but maybe you're just walking by the storefront and you're like, oh, hey, what's going on here? But I am Hans Albrecht, 15 years market maker, and another decade after that doing a whole bunch of managing a whole bunch of income funds. So, a lot of experience, about $1 billion in option strategies managed. So I am considered somewhat knowledgeable. I do make mistakes, so I'm not one of those guys who never makes a mistake. You'll find those on the other channel. But today, although this year's been one heck of a year. Of course, today, anything we talk about is for information, educational purposes only. I hope you're okay with that. If you are, let's keep going. If not, we'll see you perhaps next time. And for now, I want to tell you guys about, I'm not going to do that yet. Let's talk about markets right now. And let's take a look. We had Snow earnings after the close. So Snowflake is a data, you call them kind of data lake kind of stocks, right? So they, you can think of them, sorry, I have a bit of a cold, so that my throat hopefully holds out. there is this whole industry of companies like Palantir that deal with data in different ways, right? And so they are going to be a facilitator. So as I've been talking about lately, I've been thinking we move a little bit more from the builders of AI to the users of AI, and that includes sort of the intermediaries, the facilitators of AI as well. So let me just see here what you guys are looking at. Okay, you're looking at the right thing. So that to me is the names, is of course the users of AI. And I've been sort of talking about even things like Goldman Sachs, right? So that's, I mean, if you think about it, AI is such a transformational technology in a sort of blanket, varied, widespread way that it's going to affect everybody. So everyone's going to have some element of AI, some more than others. You're going to have like Rocket that's been rocketing back a little bit lately. You can see here. Is this pretty small, guys? Somebody tell me if this is like massively small. Let me try. Let's do this. And then let's get rid of this. No, that's good. We'll keep my MTI on here. This is my MTI indicator that we use in the turbo scanner. So you can see Rocket coming back here. This is one of those very vertically integrated full stack, as they call it, right? So they deal with real estate at every sort of level, right? Very comprehensive, right? So they've been adding, companies along the way and preparing themselves for the big real estate comeback, which may or may not come. But as we see rates come down, we're certainly going to, probably experience a little bit of activity there as that sector unfreezes, right? It's been kind of frozen. Everybody's been in there with their low rates, and as rates come down, they are more inclined to maybe move. And you can see here, this is nail. So this is the Direction 3-time home builders. So been having a good run, right? Kind of breakout here, nice few moves, a little bit of consolidation, almost hit that 9-day EMA, which is always a great spot. I'm going to talk about the 9-day. Really serves as a confirmation of an uptrend or a downtrend in the short to medium term. So that is taking into account things like PHM. So here's Pulte. This is a home builder right here. A nice little breakout here. That's a bit of a weak line, but breakout here. So this is coming back again. We had the initial excitement about rates coming down, and then what happened about a month ago, I think it was, the rate odds, the odds for a rate cut in December dropped to about 35%. And then what did we have a couple of weeks ago? A couple of weeks ago, we had a leverage scare. Do you remember the leverage scare that we had? Here's NVIDIA, had this good earnings number, and then absolutely got crushed that day. Let's take a look at what the Qs did. This was a big flush, liquidity flush, right? Leverage flush. So what happened here is we broke this line, NVIDIA, boom, we came back, almost got back to that line there, and then collapsed that day, at the day after earnings, and closed on the lows. So that it looked a little worrisome at that point. And then they started to march back. Next day, Williams came out, talked about how he thinks there's going to be a rate cut as well. So I don't know if he was sort of planted there to kind of calm things down a little bit. But I think if the market had gotten into probably, if we had dropped below 6,500 with any velocity on the SPY, I think that had the potential to really kind of snowball. The gamma profile was not very good, right? So we had a lot of negative gamma around there, very little positive gamma, which is supportive. We don't have to talk too much about that. Excuse me. This cold's got me pretty good. So he came out and said, okay, everything's fine. We're going to have that rate cut. And since then, we've gone back to about an 85 to 90%. We're almost 90% chance of a rate cut. Poor jobs numbers. That almost solidifies the rate cut, which of course markets like. They don't like it if it's the economy falling apart, and they don't like it necessarily if it's if employment is absolutely cratering and collapsing, then that's not going to be good either so much. Although we're going to continue to see weakness in that area. But that was enough to basically the next day we had that big flush. And I said, listen, this feels like it's done. We had that every now and then when you get a big leverage move, everybody's kind of buying all the high beta stuff. We had that flush and it really felt like that dissipated. So in the community, and in my various newsletters, I said, this feels like it's done. We could revisit, which we didn't, but I said we're probably not making new lows. And here we haven't looked back since, right? So here we are blasting all the way back to this trend line. So the NASDAQ has really retraced quite a bit of what it lost. And the SPY actually looks even better, right? So the SPY, which of course is very heavily weighted in the big cap, is looking pretty good. It's broken out through here, consolidation just for a couple of days, and this 9 EMA is catching up. So you notice one thing is that the EMAs or the SMAs as well, those moving averages, what can cause a market to get to certain levels with moving averages? It can either the market can move to the moving average or the moving average can move to the market. So as long as we stay up here, we're going to have this moving average move up. And sometimes it's just a matter of time until we get that touch or we get that level where we can now get going and bouncing again. So we've gotten ahead of that here, and we had a very nice move today. But it was definitely a little bit of a broadening move. So let's talk about what is going on now. So let's talk about Apple. That's had an incredible run. I still like it. A lot of people have been negative on it all year, and I've been saying absolutely not. This is AI in your pocket. They're going to be selling a crap ton of these phones, and sure enough, we got some news today that they're selling like hotcakes, and they're going to be outselling some of the Android phones as well. So Apple is in the right place at the right time, right? They are not that good anymore at innovating, but they are certainly in the right place at the right time with an incredible roster of an ecosystem that is right there for those many eyeballs that and that loyalty that is out there for Apple. So they're in the right place at the right time. It doesn't matter, right? Expensive stocks that are doing the right things and getting the right things done are being tolerated. Expensive stocks that are not doing the right thing. So let's take something like Oracle. That is no bueno, right? So this is a stock that has a heck of a lot of commitments and does not have a clean balance sheet like some of the other mags. And so this is a company where they're saying, people are feeling, well, we don't know if they're going to be able to fulfill all these commitments. So good story, great story, not the greatest reality. Another one, Meta. So fantastic company. They're going to figure this out. But for now, a very cold reception from the market after earnings because they don't have a clear plan and path. Zuckerberg's being a little bit flippant about the money he's spending, and the market did not like that. Now it's coming back a little bit. I have a bit of a short credit spread on this position right here. So I'm thinking that it kind of retraces down here because in my view, it could be dead money, right? So remember, in markets, it's not so much that this is a terrible story. This is not a terrible story. They have incredible assets. They have an incredible following. They have an incredible ecosystem, but they are spending, and the market is not comfortable with the return on investment at this point. They will figure it out at some point, but right now it's dead money. So remember, there's great stories and they're in play, and then there's great stories that are maybe fractured a little bit, and people don't want to sit on that, right? It's dead money. They may look at this and go, well, this is going to be sitting around for 6 months, so I have better places to put my money. It's not that they necessarily hate the stock. It's that money flows like water, and it's got to flow to whatever's going to be delivering some value. Now, a stock that is in the complete opposite direction of a Meta is Google, which I have been pounding the table on in the community. I said I was negative down around 180, under 180. I even shorted puts down around 160, 170 because I thought search would be a problem. Then I started getting constructive around 185, 190, and they got super, super bullish in the low 200s, and it became my biggest position. And here we are. This is a company that has their fingers in everything. This is the greatest AI company in the world. They are going to mow OpenAI's lawn. OpenAI has a great head start and they're not going anywhere, but this is a company that has the trust. It has the ecosystem that a lot of companies are going to want to believe in versus an OpenAI that's going to have to cut some corners. They're going to, you don't know what they're going to do because they're in a more desperate situation in a way, right? Not totally desperate, but much more desperate than Google, who has suddenly emerged as, they were almost considered incompetent and in the wrong place and at the wrong time. And now they're the complete opposite. They are moving their feet like a startup. They're amazing. And so this is one that I think has to consolidate a little bit more. I have a butterfly in here. So butterflies, guys, are trades that butterflies kind of good for when you feel that the move is not going to be extreme to the upside, but it's going to be consistently up or down. So you can put on a broken wing butterfly. And what I've been calling this is the pocket. So Google's in the profit on delta, right? You've had the move, which is delta, and you've had the move down, which is from Vega. You've had option pricing come down about 7 or 8 points. You've benefited from option pricing coming down because now you're sitting in the pocket of where you are short Vega, right? So without getting too deep into this is kind of sitting right in that pocket between 310 and 320 is a perfect pocket. If it wants to get going, still going to make money. But in the meantime, this is really the pocket. If it breaks 310, then I'm going to start getting nervous and probably get out of that position. Another one I looked at today. So I want to talk about how the theme is a little bit less technology, a little bit less mag overall, because we can see Amazon struggling, Meta struggling, Microsoft struggling. Look at that. They have a great ecosystem, but embroiled in perhaps OpenAI a little bit, and things aren't maybe going to go as well over there. Although it's a pretty big pie, right? So you got to think OpenAI is going to do pretty fine. I think you're going to probably panic a little too much, but there is a very, very bifurcated Mag 7 right now. And what did we have happen today? We had broadening, right? We saw that a few days ago. It gave up a little, and now we made new recent highs in the IWM, which is the Russell 2000. So this is a stock. This is the ETF for the Russell 2000, and I'm very heavily positioned in this. And I feel that the broadening is going to come. So let me show you guys a little something over here. So the broadening is really something that is happening at this point. And we can see that in some of the data, right? So we can see here we can see that this has become very much an everything rally, right? So here, this really shows you the everything rally. So this is what I think as traders and investors, we have to start keeping in mind is that, and I did start talking about this about 6 weeks ago, perhaps, a little bit early, not really, that's when the high beta names collapsed, but this is what's suddenly happening now. This was a really, really narrow participation. What does that mean? Narrow participation means fewer stocks driving the bus in the market, right? Fewer stocks driving the bus. Now we're starting to get signs of that broadening out. And that is a very, very powerful thing. It's not just the S&P that is the story. We've got foreign demand coming in. I remember when they started to get out, there's tons of foreign selling back in April. I said, they're going to be wrong, plain and simple. And what's happened since? Well, the foreign money is starting to come in again. They're buying equities. They're buying U.S. assets overall very aggressively. The U.S., despite the fact that DeepSeek's been coming out with these great models and all that, the bunch in technology, in my opinion. That could change. But if you look across the stack of value in technology, really it holds the lead in like 9 of 11, 9 of 12, various sort of buckets of technology. So it's going to be very difficult to displace the US, and it's one of the great it's the great consumer economy in the world. So to just sort of dive deeper, let's look at factor volatility. So what that means is what's the volatility of the underlying sorts of moves that we're seeing out there? The underlying sorts of moves. So think of momentum, right? Think of high beta. Think of all these crazy moves in nuclear and data center and all these things that are moving around, quantum stocks. The volatility has soared in those. The volatility has not really done too much in the overall index. So what that is you've seen the SPY generally. I mean, we did have a bit of a sell-off, a few days ago, but generally speaking, it's been quite contained, hasn't it? It really hasn't. It hasn't gotten to any sort of level. Like we've seen some high beta stocks come off 70%, 60, 70%. Those were really, really big moves. Another broadening. Here's your breath. Your breath. It is not bad breath anymore. You don't need to pop a mint, because now you're starting to see the broadening out. That's exactly what we're talking about. The breadth of the market. Why is that? Why do we start to see breadth in the market? Well, it's what I talked about. Uh, uh, what I've been talking about for a very long time, which is we're going to start seeing the benefits of AI to the broader economy, right? We are definitely seeing softness in employment, but look at the profit margins have been soaring on big cap. They're starting to inch up in mid cap. We're seeing, actually, this is a bit older, but it's just a slightly outdated, but we're seeing even better progress there. And then in small cap, that's going to come as well, right? It kind of does this. It goes from there to there and then to there. And then suddenly you have a little bit of a roaring 20s effect of AI starting to play into everything. So we call that the inference phase of AI, right? That's the phase where AI moves its way into the broader economy, because anybody can have AI, right? You can have fantastic AI for free. You can have for $20, you can have even better AI. So it is going to give the ability to companies to accomplish a lot of things, right? And that's very, very exciting for them, because there is a lot that they can do. They can do more with existing employees. They can get rid of some employees and as well, which is good and bad, I guess. And that is basically the what's going to be sort of the secret sauce for these companies, because we have this effect that basically the broader economy is going to start adopting more of these things. They have no choice, right? It's existential. They're going to be doing it, and unfortunately, this is probably going to continue to happen, which is job openings are going to drop. Part of this is from the pandemic, right? So we can't read into this too much. And as the market goes up, jobs will probably stagnate. Not so much that people are going to necessarily get fired left, right, and center, but we can see that the hiring has really, really slowed. There are segments, a younger population, very, very difficult situation, and that did Main Street, Wall Street reality, which is companies are going to be doing better, and individuals may not be doing better if they don't retool, reskill, and find ways to really kind of benefit. But the reality is, so if we look at this, is that for the overall market, it's going to be looking at the things that are going to be happening that are positive, which is, for example, the industrial renaissance, right? The industrial renaissance is back on. We're going to see PMIs go nuts. We're going to see basically a big return to having to build stuff, right? We're going to be manufacturing. We're going to be building data centers. We're going to be upgrading areas that are dilapidated. The power grid, things like that are going to have to be dealt with, and so that's a very, very important thing for the economy. right? And I know everyone says, well, it's all based on the economy. It's all based on AI. Well, yeah, I mean it is, but it's an important thing, right? It is an important thing. We can see here that companies, the revisions are starting to come in, right? So for all the bears out there who are saying, well, we're going to slide into recession, there's really not. Headlines are sometimes very negative, right? Because the headlines are going to kind of hang their hat on the negative aspects of AI taking jobs. The reality is that's going to improve profit margins. Look at some. That's why Goldman Sachs is one of my favorite yeah, holdings, because I think they're just going to benefit immediately, right? They're going to be those companies that benefit right away from finance is a very clear example of that, where you can really move the needle quickly, right? It's a digital world. There's nothing going. It's not like you're manufacturing something where you need to build out your infrastructure. It's in finance. It's you're pushing pages from one side of the table to another, and that's where you can really use AI to basically create a lot of efficiencies. Here is the Russell 3000 median stock earnings per share growth. This is what I'm talking about. Broadening out, right? Coming from the depths in 2023 to now a broadening out. And that's why we could continue to see a little bit more of what we're seeing right now, which is, the tech stocks will rally and then they'll pull back because there's a rotation going on. There's a rotation going on. Now, there are strong names, right? There's incredibly strong names like Micron. There's a massive shortage in memory. This company with earnings in a couple of weeks, I think, is going to post some great numbers. There just aren't. There's going to be supply issues, and that's going to be a reality of our new world as well, because you can't have this massive, endless, insatiable demand for compute, which is what the inference phase is. Those gears never stop turning. You can't have that, and it's not a world of limitless resources, right? There are limitations. And so right now they are running out of these things. They have incredible pricing power for certain products. I also positioned in FCX, right? So I think copper is going to be another place that you can move the needle. So look at copper. This is FCX, very pure play copper. I think that continues to do well. And so if you look at some of the trades, I'll show you. I'll show you what I did today. I went out to I think it was the September 35. Actually, let me bring you over to the other screen here. It's going to be a little bigger. All right. So I went out to the September 35. So that picking kind of a higher delta, like an 80 delta. And what I liked about it is I'm starting to see now what I warned members about probably about a week ago, or maybe 6 weeks ago, 5 weeks ago. I said, I'm not big on buying options at this point because they're very, very expensive. And that can be a problem. You need to be aware of that, because you have that Vega exposure. If you buy options that are exceptionally expensive, especially if they're a little bit longer term, when they compress that option pricing, it could hurt a little bit. And so as an option trader, you definitely want to be aware of those kinds of things when you're trading. Let me see if I can get bar chart going here. And I'm going to show you some of the things that are actually kind of interesting. So if we look at Amazon, they haven't all come down, but let's take a look at Amazon option pricing. And Amazon's been a little bit weak until the last few days, but we can see here that option pricing has definitely come down. So let's get this noise out of the way. I mean, you see the rank percentile down around 20 on average, which is pretty coming down a little bit. Panic levels, right? So that's what we saw a few weeks ago, which was of some concern, is that we've seen these panic levels go into options. People, investors, institutions are just aggressively buying upside. So that's what happened. They went from really not caring a few months ago to aggressively buying upside and wanting to participate in the mania that is AI, that is, manifested itself in markets just soaring. So here's even Micron, which has been, what a move. Look at this. The 6-month options just absolutely going bananas. This is, you do not see this. It's very, very rare when stocks go up, right? That's typically something you would see in a difficult market, a down market. April, see April right here, ugly market, option prices went up. This is very unusual to see on the way up, but it's a sign of exuberance, a lot of truth to why they're excited about this. I think Micron's not very expensive, and I think they're incredibly important in the AI race and in the AI stack. So we've seen a pullback here, but a little stabilization, right? So we have had definitely some names that have come in. If you look at Hood, this is a name that I added to today. So I got constructive on Hood again. You can see here we have option pricing way down at the six month mark. I mean, way down. So here we are coming up from those highs. So forget about this here. This was an almost considered an anomaly. So this would be sort of a resting heart rate somewhere in here, and we've got about a 66 level. So that's really, very reasonable for, I think, the moves that we could see. Is it reasonable for going into the summer and you don't think anything's going to happen? No, then it could probably drop even more. It could drop even more into the holiday. That's one thing you have to keep in mind. You want to be comfortable with a little bit of an extra drop if we don't get that move up. What you need, if you're long calls and you're buying, this level here, you need your delta to outrun the Vega, right? So if the stock goes up, that's your delta. You want the move from Hood to overcome any compression of option pricing, which can happen, right? That can easily happen on a strong move up. Especially if it's a very strong move up, then the option pricing may even recognize that and not drop much. So definitely a little bit of exuberance has come out of the market. But I would only be positioning in things that I'm comfortable with. So let me show you Meta, for example. I'm not as comfortable because I sort of see it as a little bit more challenged, right? So the option prices come down a little, but I think it could keep coming down because I think it's considered not in play as much, right? I mean, there's passive investing and they have to own it. But I think managers are kind of stepping aside of Meta right now. So what that means is you've got names, you have to pick and choose a little bit, right? It's not like what happens early in a sort of bull run is everything gets lifted, right? Everything does great because there's an excitement. It's AI. It's, well, anybody's going to do well. Over time, we start to see who's actually starting to do well, who's actually starting to make the right moves, and that starts to make a difference, right? Everyone's kind of benefiting at first because the tide lifts all boats, but then at some point, companies are starting to do the right things, and some of them are going to do the wrong things. And that's where this is going to become a little bit more of a stock pickers kind of market. So something like Goldman, really like it. Hood's really hung in there, right? So I think Hood is actually an interesting way to have exposure to fintech, to all the things that basically they're a transactional company, but they have memberships, they have all these sort of recurring revenues. They're involved in these new sort of what do they call them? Those markets, those betting markets, right? Those betting markets, and as well as that crypto. So right here, nice little touchdown on that 9 EMA, which I love to see. If you hold that 9 EMA, a bull run is very powerful. Here we are again. Probably can't get too far from the EMA, and it'll probably cycle back down. But this is a name where I'm exposure here in a name like that. Whereas, I'm going to show you two names that were but are not acting like that anymore because the market is starting to for the moment. So we can see IREN. So these are crypto companies. I'm going to show you IREN and Cypher. So these are two crypto companies that used to be crypto companies, and they found themselves in a position of, what do crypto companies need? Well, they need power. So they're all set up. They've gone through the regulatory process. They've gone through jumped through all the hoops, and now they have access to power, right? They don't necessarily create power, but they have access to that power. And for hyperscalers, for companies that need power in a world where power is going to become a little bit more scarce and harder to get a hold of, these guys are plugged in. They're already plugged in. So that's what this move is about. This move from the teens all the way up to 75. That's what that's about. This does not have to do with crypto. It has to do so much. It has to do with the fact that that is what these guys are doing now. Now, the other one, so this one though has rallied back, did not hold that 9, came down below, hit its head back on, and now is. So this is one where I'm not as comfortable. I have a position. I'm probably going to look to sort of hedge it out or maybe trim it a little bit. The one that I kind of like a little better, and remember I said there's two companies that really benefited similarly on the way up. This is another one of those former crypto companies that has turned itself into a provider of power. But look at the difference here. Above the 9 EMA, looking better overall. Definitely broke down here, but this is one where I think this is the one where they're plugged into nuclear power. So this seems to be at the moment the more favored play. So let's take a look for fun. Let's take a look at the options, and then we can sort of look at an interesting play that we might consider here. This is not the kind of thing we do in the Turbo Trader Pro Scanner. Which, oh, wait, I want to show you guys that. So here's the Turbo Trader Pro Scanner. You can see NVIDIA is red right now. So this is something that I've developed over the years, over everything that I've learned. It takes into account dozens of metrics, volatility and sentiment and technicals and fundamentals and everything. I mean, you name it, this thing takes skew and term structure and all this stuff. Money flows, are the flows going into healthcare? Are they going into industrials? And it basically spits out all these ideas. You can see here, and my proprietary MTI indicator, it's actually been improved. It's a super indicator now. It gives you the idea of, is it an income trade, right? So is it an income trade? Is it a turbo trade? So here are a few that are income trades, right? So here's an income trade here on MedPace. So it's yellow. It's the good news is it's an improving yellow, right? So you don't want to see a downward yellow. So we got an improving yellow. So that's positive. I like to see that. So I go in there and I'd say, okay, what's the strike? What's the month? Tells you everything that you need to do, as this has been filtered through thousands and thousands of stocks and metrics to find these trades that make sense. We've also got a few in here. The reds, I'd be watching, but I wouldn't be doing much on them. In fact, if I had positions, I'd be looking to hedge, be looking to collar, be looking to play downside, right? So on Meta, for example, I've got a credit, a bear call credit spread, which means I don't want it to go up beyond a certain point. So I'm playing the income game from the other side. If you've got the right tools that give you all the things you're looking for. And then the turbo is where, for example, here, look at ASML. That's a recent turbo. You've got this up green, and it is just getting into that turbo. So that might be an interesting one where you'd want to look and sort of feel like, okay, there's enough stability there that we could squeeze out some upside in some very solid momentum. Broadcom, for example, just kind of struggling a little bit. It's good. It's green. It's a turbo trade, but it's not like, super turbo at this point. And then down here, you're going to get all sorts of, indicators, the squeeze. This is my easy money, this fast money ratio. I've got various ones on crypto and broadening out, and the things that right now you actually have quite a few sectors that aren't doing quite as well and aren't being chosen. Energy was positive. It's a little bit sporadic there, a little bit patchy. The gold is looking fantastic, of course, and outperforming a basket of other things. So this is looking at sort of flows and outperformances and things like that. So that's basically, and then when you're in the program, we do a weekly class. We had our first class today. We put on a trade yesterday. We talked about it. We talked about how it all works. what to look for. And then you also, as a member, you get the MTI indicator. In fact, you get, I think it's two of them right now, two different indicators, one a little bit longer term, one a little bit more short term. You get that for TradingView with the program. So really, really cool kind of thing that really shows you when to stay in. And so when I talk to people, I say, listen, what are your major problems, right? What are your big problems when you trade, right? And it's always, well, I can't find the trade, when to get into a trade. And then the other one is, well, I don't know when to get out of a trade, whether I'm doing well on it or whether I'm doing poorly on it. I don't know. I freeze up. I don't know what to do. And then the third one that people always overlook, the third one that traders always don't talk about, but they all experience it, is knowing how long to stay in a trade, right? And that's absolutely crucial, because if, I have so many people come to me for mentoring and other things. They say, Hans, I know how to make money. I can figure out how to make money. Like, this isn't like brain surgery, right? Stock goes up, stock goes down. Options are a little trickier, but let's face it, this is not the Manhattan Project. So I can figure out how to make money sometimes, but I can't keep it. I give it back. And the truth is, in income trading, you can have an 85-90% win rate and still not really make money, because you let the ugly situations get uglier, and you get into situations you shouldn't get into. And that's a powerful thing too. Like, why would you get involved in a trade here when the indicators are telling you you're wasting your time? What happens? Number one, you're getting hurt financially. Number two, out of situations that may be better opportunities. Yeah, I've had clients come to me and say, I can't sleep anymore. 8 months I've had this horrible position on, and I tell them, look, get rid of half of it, do this, roll it into some sort of call spread. We figure out something, and then the next day they say, well, I can't believe how much better I feel. They become like, what's the guy's name? Nash and A Beautiful Mind. Suddenly they can see the world again, right? So there's a risk that people always forget, that you get yourself into crap situations, that takes you away from finding new opportunities and having the capital to do that. So it's deeper than you think. It's not just about losses. It's about of being in the right things and finding new things. So the dashboard, it plays defense before you're even playing offense, right? It's telling you, stay away from this, stay away from that. This looks okay. Keep an eye on it. And so that's really what it's all about. And so it's very, very exciting. These are very, very exciting things. So they're things that I'm using. You get the indicator, you get the weekly classes, you get all kinds of bonuses and courses and things like that. So do we have any questions? I want you guys to you can ask me about options, volatility. You let me know what kind of stuff you want to talk about, if anything at all. Any questions? Any questions? Mazda's here. Hey, Mazda, how you doing, bud? What were? Oh yeah, yeah. No, you should. I don't know why you don't get access to that. Mazda in the Leaps program, and I don't know why you don't have access to that. You should. I'm glad you mentioned it, because that's people don't have access either. I had my beautiful scanner on the screen here, and I don't know how to stop the screensaver. I'm like the AI guy. My portfolio is up like 170%, but I can't figure out how to keep the stupid screensaver on. So, I need AI to figure that out for me. All right, guys. So let me just give you a quick rundown of things that I think are very interesting, right? I want you to have some takeaways. Number one, options are getting more reasonable. Can they compress a little bit more into the holidays? Absolutely. So absolutely, that could happen. So you want to be very careful with short-term options, because you're going to need to be right away. And if we don't get an absolute melt up or melt down, it's going to be difficult to hold those short-term positions. As those 6-month to 12-month options are getting cheaper and cheaper, some of them are still a little high. I think that's going to create an amazing opportunity for us for 2026, which I think is going to be a gangbusters year. I think it's going to be amazing. Mazda, are you excited? I mean, it is going to be an incredible year, because this is when we see enterprise start to grab the baton and the bull by the horns when it comes to AI and start making a difference in those firms. So the sectors, the industries, parts of the economy that are going to benefit. We don't know how that's going to look, but I can bet it's probably going to look pretty good. Longer term, I think there's going to be so much disruption that we better have eyes in the back of our heads, because there are going to be companies that are in trouble. But in the short term, there's going to be an excitement and exuberance, I think, for companies to start to do well. Now, there are going to be challenges, right? So I'm happy to see Salesforce popping right up to 250. That thing got down to 220, 222, and it's popping up to 250 right now. So they put out good numbers apparently, and that's a positive, right? Because there's been a worry about software. There's been a worry about software not being able to handle, if AI can suddenly do everything, then what do we need Salesforce for? But I've put out videos saying that's nonsense, right? Salesforce is that they have given you evidence that they're going to be doing even better because of AI. So, but I think that's unique, right? I think it's going to be idiosyncratic. There are going to be some things that maybe Adobe has trouble because many of the things that they do. Maybe they do, maybe they don't. I don't know. It's extremely cheap stock. I actually own a little. I own some Salesforce as well. So I'm betting that this becomes a thing. GitLab, bad shape, is in bad shape. That's a bit more on the developer side of things. But the software area, let me show you guys software. Here's your software index, right? So this is what's happened as AI, as the LLMs are doing better. They're worried that software isn't going to be able to handle it, and they're going to lose either profit margins if they have to cut costs to compete, or they're going to just lose customers. So we've had a nice little rally back here. I don't have my ratio. I should bring up my sort of software versus semiconductors. It's doing okay, right? Although semiconductors had a good day today. But we're seeing this pop, and that Salesforce should help tomorrow as well. I wonder if Adobe's doing better after the close here. Adobe is, no, it's not really doing very much, right? So they're excited about Salesforce. They feel Benioff must have said something positive. I think they're in good shape, right? So I have some call spreads, and so I'm happy to see that thing up. And then outside of that, I think there's even other interesting places. For example, luxury, right? So you've got Ferrari. I think Ferrari is an interesting play. I've been talking about how the rich are just going to get richer, and things like American Express are probably going to do fine, right? So we've got a position in that. And you know what? I wonder what is the scanner in that one. Let me see. Let me see what it looks like there. Nope. Where's my scanner? Okay. So if I look at, let me go, that's AI. Let me go, where's AXP? Google, of course, is green, eternally green. It's looking good. Is AXP in here? Be interesting to see what it looks. I imagine it's a very strong yellow, which would be kind of a income. You'd be looking for that income trade. But the whole idea is when things start to look really good and they want to rock and roll, I hate to give up upside. And that's the problem. I've had so many people come to me this year and say, income's been okay, but man, I feel like I've left so much money on the table. And I say, well, yeah, you need to be in the right strategy at the right time. We don't have a crystal ball, but if you can read sentiment and volatility and all the metrics that this thing incorporates, then you're going to be in better shape, right? And that's what it's all about. It's about those incremental improvements, and this is more than incremental. Rocket companies, we talked about that one. So that's it. Thank you very much for watching, everybody, and we will see you next time. I want to make this as a regular thing. And if you have any questions, reach out to us at info@theturbotrader.com, and we can answer any questions for you. If it's about the scanner or anything else that we do, we're happy to help you out there. We want everyone to really benefit. We are delivering substance, and that, I think that's something special these days in a world of options guru grift, where everybody's got some BS to slingshot whatever shot strategy, which is all just garbage, right? So it is all just garbage. So I thank you for watching, and no offense to those guys, but that's why they end up with me. Okay, we'll catch you later, folks. Thanks for watching.